Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 11th of March, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the third week of March. And as we look at these two inversely correlated pairs, the Tuesday was where spot gold fell hard, almost reaching the daily 200 EMA and just below the 62 retracement level before it managed to turn around, and then on Friday managed massive recovery with the non-farm payroll report. Whereas on for the dollar yen, was the inverse, climbing up into the resistance zone and then getting rejected, and then Friday was a significant fall back into support for the yen. And we'll compare this as well with the DXY. But let's also take a look at what events triggered these turnaround moves from last week, and then preview the highlights for this coming week as well. The key impact on the Tuesday fall was from the testimony from Fed Chair Powell, two-day event before the Senate committee, and he reiterated that they will do whatever they can. The Fed will do whatever they can to contain inflation and bring it down to its target rate of 2%, and they may continue to increase the rate of hikes, and could be even at an elevated level. So maybe instead of the 5 to 5.25 rate terminal rate, it could even extend higher to 5.5 or even 6%. So that was what spooked the markets, and overall risk off for all the markets, including the stock market. So US dollar got a boost from that on Tuesday, starting Tuesday and continuing on Wednesday. Then, however, on the Friday, things turned back around with a slowdown in the wage growth to below the expectation, and also a increase in unemployment rate. So it was a mixed bag where it did show some slowdown, but jobs added was still higher, still significant jobs added above 300,000. So slightly mixed, but the market took it at probably less inflationary with the slower wage growth. And we did also have a rate hike from the RBA on Tuesday. So they did increase 0.25%, 25 basis points. But it still didn't help the Aussie dollar, and it still continued to weaken. So this coming week, there are some key highlights, and starting with the US CPI on Tuesday. So that's a very critical one again, and for the inflation indicator, followed by PCE, which is the following week. But the CPI and PPI on the Tuesday and Wednesday, then some jobs data from UK and Australia, and a key one from the ECB on Thursday with their rate decision, and which they're expected to increase 0.5%. And then Friday, there's a consumer sentiment figure from the US. So some significant news for next week to watch out for. Let's begin with the spot gold here, and after attempting to climb up higher at the end of the previous week, it paused, and on Tuesday was hit with Proprietary Powell's testimony. So this fell hard, did not reach the daily 200, but then the next day closed as a doji, and then turned around as a morning doji star, and then managed to recover strong on the Friday. So the non-farm payroll right into resistance zone at the 38 pip retracement. So from the 62 pip, found support and then turn around and climb back up for the week. And let's take a look on the weekly time frame. That's where is long wick and the bounce from the support. Close bullish for the week into the 38 pip retracement. So we'll see if this resistance can hold at the 38 pip. Otherwise, there's a danger of continuation move right back into 1900. So this closed at the 18, just below 1870 at the 1867. It hit the 1870, right, just below the 38 pip retracement. And we'll see if this now with the daily 55 EMA here, it can provide some interim support. But the major support is still coming up with the daily 200 above the 1800. So it looks like for now it's safe, and we could put a strong support zone between the 200 and the 62 pip retracement. And it's trying to find some support here. Okay. So let's see what the impact is going to be from these key news next week with CPI and the PPI. Critical on for CPI on Tuesday. And if the CPI figure is still hovering at the high levels, even though it could be drifting lower, this could be danger of falling back down into support. But if it does come up lower than expected, then that could help this move and break out higher, and could influence the decision the week after with the FOMC meeting. Okay, so some key triggers for this week's news events. And here's the DXY, US dollar index, and you can see that as a mirror image to the euro and the other major pairs, the Tuesday was a big bounce, and from the US dollar with Fed Chair Powell's testimony, and ran through the 105 resistance zone until it hit the recent swing high at the 100 pip, where it closed as almost a doji, and then turned around and gapped down on Friday with the non-farm payroll report, and spiked through the support zone again. So still struggling to make any headway higher. and I think it's probably going to stay this way until the week after with the FOMC meeting coming up. So it did manage to close above the 55, but it's stuck between the 55 and the daily 200 EMA. Also to note, this coming week is the change in the time for the daylight savings for the US. The UK and Europe will follow 2 weeks later. So on your MT4, your 4-hour closes will be 1 hour ahead now. Okay, so this close, we can remove this trend line and this trend line here. Support is still at the same area. Major support below that at 103, and as well as the 50-pip retracement. So it's still struggling to break out above this swing high, and still finding support from the 62-pip retracement area. So it is in the upper range of this retracement. So let's see whether it's going to break out higher or break down back into the next key support zone. Unlikely it will happen next week with the FOMC coming out the week after, but we'll see what the impact is from the CPI data. All right, let's also take a quick look on the weekly time frame, and yes, it did close as a doji, similar to a lot of the major pairs as well. Okay, so let's move back to the other major pairs. Dollar against Japanese yen, and last week's BOJ decisions, monetary policy decisions, rate was unchanged, of course, and everything else was unchanged with Kuroda's last BOJ meeting before Ueda takes over. And it has been it was on a Friday as well, to get before the non-farm payroll report. So it didn't bode well for the BOJ here. It did climb up into resistance, right into the resistance zone, just shy of this swing high, before falling back right into the confluence of the 55 and 200 EMAs, just above the 62-pip retracement. So it has a large range to trade in for next week, and it's difficult to see it breaking out of this range just yet until the FOMC meeting. So we'll see how much weakness there is for continuation move, or whether it's just going to climb back up to range and trade within this range here. Okay. So critical week for US dollar pairs and the majors related to that. Do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.